everyone. This is Adam Meister, the Bitcoin Meister, the Disrupt Meister. Welcome to This Week in Bitcoin. Today is May the 18th, 2018. Strong hand, long-term thinking, international guests of mystery. No, these guys aren't mysterious guests. You know who these guys are, and they're so huge in this space. I can't have more than two people on when they're on, dudes. So it's Simon Dixon is here, and he's in the Isle of Man today. He's going to talk about that later. Giacomo Zucco is coming from Italy. So
but I can be more mysterious like this.
Very mysterious. Well, this has been a week of, well, there hasn't been that much mystery this week. It's been pretty straight up. I mean, we had an event in New York, and the price, everyone's worried about the fiat price. But here you go. I want to start out with Giacomo Zucco here, because there are a lot of people. Technical analysis. A lot of people are into technical analysis, and I think that it plays a role in knowing about cryptocurrency. And there's some great guys that do technical analysis. But then we've got these people who are obsessed with it, who I think are living their lives vicariously through technical analysis, like giving them excuses why they're no coiners or why they're not going to buy big, and just they get caught up in a soap opera. They want to hear the next prediction. Maybe these people aren't bold people. They can't make their own predictions. They want to hear some formula make predictions for them. Giacomo, what do you think about technical analysis and its role in cryptocurrency and Bitcoin? Is it overblown? Are people too obsessed with it?
Very interesting question. So in general, I think that technical analysis can work mostly because of self-fulfilling prophecies. Basically, people coordinate over psychological threshold, psychological barriers, and so technical analysis cannot predict the future, so cannot predict the trend, but inside the trend can actually predict where a majority of the players are likely to move in one direction or the other. It can possibly help you to imagine panic buys, panic sells, psychological threshold and stuff like that. I think that that kind of analysis is more efficient, is more realistic when there is a lot of uneducated traders. So predictable traders, which are not doing technical analysis themselves, they're not trying to beat the market. They are a very, very ingenious, very, very unsophisticated market. And so an analyst can predict what the monkeys will do, what the very weak ants will do. In Bitcoin, that's basically the case, because although there are professional traders and funds that are starting trading with it, there is still a very, very huge amount of technically illiterate, of economically illiterate, financially illiterate people trading, and so it's probably, I mean, it's easy to the same way it is easy to organize pump and dump and market manipulation. It's also easy to apply this kind of common sense pattern recognition, which at some level, as I said, is self-fulfilling. Like if everybody thinks that the TEA is working, it will work.
Yeah, there you go. I couldn't have said it better myself. Before I get to Simon here, you brought up actually the next question here. You talk about an unsophisticated market. There are a lot of unsophisticated people in Bitcoin who now they think they're traders, or they think that's why you get into Bitcoin is because of trading. In the cryptocurrency ecosystem, would you say, I mean, what I'm seeing more and more is that we're in the minority, that most people in cryptocurrency are totally unsophisticated and can be fooled very easily. Are you getting this vibe too?
Yeah, absolutely. But I am totally unsophisticated as well when it comes to trading. I participate. I used to participate every day with Tom Vase in his podcast. This week I couldn't for personal reasons, but I will. And when I follow him, I see that I really don't understand anything about TA. And if I was a trader, I would be the monkey. I would be the very weak end, which is easily played by the professional. Because one thing is knowing Bitcoin. One thing is knowing TA, which is a separate argument. The overlapping is incredibly small, and also many other kind of fundamental. Well, in crypto land, fundamental analysis is two things: one, understanding Bitcoin; two, understanding marketing during irrational bubbles, which is everything else. And then there is a TA on top of that. I'm kind of good with the first thing. I mean, I'm relatively speaking good in. I'm starting to get understanding some Bitcoin. I'm very bad in understanding irrational marketing, so I can't understand altcoins trading, and I'm very bad at technical analysis. So we are kind of all unsophisticated.
Yeah. Well, I will say this. I don't see cryptocurrency as a place that I'm interested in trading at all. So for me, technical analysis is totally noise to me. For me, it's about having a strong hand and just holding on to it. Simon Dixon, what do you think about technical analysis? Is it a tool in your arsenal, or is it just something that's out there and it's confusing a lot of people these days?
Well, TA is not something I personally use, but it is something I know because I did used to be a trader. And I was a trader for an investment bank at KBC. And I was a market maker for a couple of years, which was scalping, putting together buyers and sellers and creating liquidity in these markets. And I think it's quite interesting you were talking about Tony earlier, because a memory just flashed by me. I think it was 2013. I think it was Tony's first conference where he was hosting a panel, and I was one of the panelists. And it was in Hong Kong. It was a conference called Inside Bitcoins. Yeah, I think this exact subject came up, and I'll give the same answer that I think I gave back then. And that is, technical analysis is merely a visual representation of the emotion of fear and greed. And fear and greed is what drives all market movements. When you're talking about candlesticks, when you're talking about patterns, they're just simply representations of psychological points that humans remember from the past. For example, right now, a psychological point will be $8,000 of Bitcoin. And people will be thinking, if it goes below that, ooh, I should sell. If it goes above that, maybe it's a turnaround. So these whole numbers, these different things. And then there's different emphasis on different points, dependent upon how much volume. So people look at volume and they place more importance on a different indicator based upon how many people remember that psychological point because they were participating in that. Yeah. But here's the game of trading. And I did spend many years studying and working in the trading markets. And I put it down to the following. If you want to be a successful trader, actually, it's nothing to do with technical analysis. It's nothing to do with the things that you think it is. It's actually all to do with psychology. The game of what makes a successful trader is the same that what makes a successful human. It's a psychology game. And the psychology game is that, can you stick to a strategy despite all the emotion and FUD and everything else that happens around you? If you can, you only need a strategy that works 50% of the time. And if you've got a strategy that works 50% of the time, then you just need to manage your risk around that. And then you just need a strategy. And a strategy might be, every time this pattern happens, I buy. And if it doesn't happen, then I have a stop loss where I minimize my loss. And that really is what technical analysis is. It puts lots of complications, lots of indicators around a visual representation of the emotion of fear and greed. And the reality is, it doesn't matter how much you learn about technical analysis, it's the psychology that determines whether you will succeed or fail. Now, most people don't have what it takes to be a successful trader, because the psychology of a successful trader is actually the opposite to how humans work. You have to eliminate those emotions of fear and greed. You have to act like a robot. You have to be systemic, and you have to stick to the strategy. Most people can't do that. That's why more people are successful as investors than they are as traders. And being a successful investor is a pretty hard one. But in crypto market, it gave just the most easy investment strategy in the world. And the investment strategy is as follows. There's only 21 million Bitcoins. There will never be more. There will never be less. And as long as those Bitcoins become more useful to more people every year, then just don't sell them. And that is the easiest investment strategy that has ever happened. And it's an opportunity that everyone can get involved with right now. And people ask, well, what's the utility? Well, most people are speculating with these things. Well, okay, that's all right. That's a user case of Bitcoin. But the most important user case is that it gives you the ability to earn your own money, spend your own money, and a monetary policy that is based upon savings rather than debt. And once you understand that, once you understand those three forces and the fact there's only 21 million, you'll soon come to realize that every year Bitcoin will be more useful. Now, it might be less useful to all the speculators this year than it was last year because the market's going down rather than up. But that doesn't really matter because the long-term fundamentals is what drive the investment strategy. If you want to be a short-term speculator, if you want to be a short-term trader, then yeah, you do need to learn TA, but understand that technical analysis is just a visual representation of the emotion of fear and greed. 50% of the time you get it wrong, 50% right. You need to learn risk management, and then you just need to, that's exactly what it is. But most people can't do that, which is why 10% of traders make money at the expense of the 90% in a less than zero-sum game, where the investment bank, the market makers, the hedge funds, and the insiders make most of the money at the expense of everyone else, and 10% of them might.
Wow, emotional representative of fear and greed. Dude, you're coming out. I knew I could count on you. Hey, Andy Hoffman, if you're watching this, take some of those lines right there. He's producing some great ones here today. Simon Dixon is. Everyone, pound that like button if you like that. What was just said by Simon. Oh, we're on fire. Hey, I wanted to say close one in the super chat. Thank you for the $50. He said Decred profits go here. One of those wild and wacky Decred guys. Simon, I do want to go back on one thing. You said that you used to trade in the traditional markets, and you used to use technical analysis. And you also made it the great point that only 10% of the traders are going to make money here. I mean, I don't know why anybody want to even get into it, but in terms of technical analysis in the traditional market versus technical analysis in the Bitcoin market, do you feel that I don't know, that it's not as reliable in the Bitcoin market as it is in the traditional market, or should it be as reliable?
I'd say it's pretty reliable in the Bitcoin market because it's getting fairly liquid now. So technical analysis really depends upon liquidity. And so in the early days of Bitcoin, technical analysis was useless. But now I think it does actually have some merit because there's a lot of people looking at the same thing that are actually creating these self-fulfilling prophecies based upon the emotion of fear and greed. And so it is relevant in Bitcoin. I'd say it's relevant in Ethereum. And it might be relevant on a few days in terms of some of the altcoins. But the less liquid the market, the less relevant it is. The more liquid the market, the more relevant it actually becomes. So liquidity is the driver of the success of technical analysis.
Remember, guys, 1 Bitcoin equals 1 Bitcoin. I wanted to remind everyone of that. Don't worry about your fiat value. It's still 1 Bitcoin always equals 1 Bitcoin. And very interesting that Simon brings up, if you're trading those other ones, other than Ethereum and Bitcoin, we've got some liquidity issues and it's not very predictable. And you never know. You never know what news is going to come the next day. I want to go, Simon brought up psychology. And Giacomo, I want to ask you this. People say to me that they like to watch my show because I keep their hands strong. What psychological techniques do you help keep your hand strong? I mean, do you have a certain mindset that keeps you in a long-term thinking mode, that keeps you from selling, or is that just your natural way?
No, I think it's at the beginning. I remember the first Bitcoin I had. Well, first of all, if there is any law enforcement agency watching, I don't have Bitcoin. I've lost all my Bitcoin in the same boating accident that costed the Fluffy Pony all his Moneros. So I was on the other boat that crashed with him. So I don't have Bitcoin right now. But when I did have Bitcoin back in 2012, for example, I used to feel selling pressure more often because I was more scared by crashes. I thought that the psychological selling point of everybody agreeing on the fact that Bitcoin is the digital gold, just like people do agree on the fact that gold is physical gold. There are metals that are even more scarce than gold, and sometimes even more malleable, more easy to trade. But there is a selling point on gold for many reasons. The same selling point has been created on Bitcoin. But at the beginning, I was scared it could fade away, and maybe we could just lose this kind of common focus on Bitcoin. Now I'm not. When the price goes down, I usually I will buy, and of course I don't, because I don't own any Bitcoin. But I would buy, and I think that looking at Bitcoin obituaries is a very good habit. When you're scared, you look there. You see the past crashes. You see the past FUD. You understand that everything is happening now that could sound a little bit bearish is nothing compared to what we just overcame, like B2X attack and the US ASF change. And there have been a lot of shit going on. Very scary. Maybe I would be a little bit scared for a proof of work change attempt by some of the devs that proposed it. But other than that, really now it's easy to stay for the long term. And the long term idea is what Simon said before: scarcity, utility. Do your math.
All right, I like that tip for everybody out there. Just check out a Bitcoin obituaries, people. That'll calm you down. That'll keep your hands strong. Simon, do you have any tips like that? Everyday tips for people, or you reveal what keeps you psychologically strong, keeps your hands strong?
Okay, two different questions. I think so. What keeps me strong is a couple of principles that govern me. This is just what works for me. Mission and karma is kind of my governing principles. So I'm governed by a mission, and for whatever reason, I felt that I was brought to this earth to work on the disruption of the banking system. I've been working on that ever since I started in banking in 2000. Well, since I left banking in 2006. And Bitcoin was just this amazing gift that was given to the world, that when, we were working on many things. We were trying to build, actually, our original vision of what we tried to build at the Bank to the Future was a non-fractional reserve bank. And then we just realized that the system is just entrenched. And whenever you're dealing with fiat, any amount of technological innovation just drove the banking sector, because then they could just cut off your accounts. And, we were looking at things like peer-to-peer lending and all sorts of stuff. But then Bitcoin came along and just created this protocol where people could build upon, and just created everyone the ability to own their own money, spend their own money, and have a sound monetary policy and an economy based upon savings rather than debt. So I see Bitcoin as this gift that the world gave. It's semi-religious for me. I respect it. I feel offended by selling it. I do spend it because I believe that is my second governing principle, karma. I believe that, you get back what you give. And so I do like to spend Bitcoin. I do like to share it around and allow people to, experience it. But what's the tip in terms of how do you have strong hands? So those are my just two things, governing principles of mission and karma. But I'd say the tip is the way to not care about price is actually just earn Bitcoin. The reason I say that, because then you never need to buy. You just, whatever the price is, you receive your Bitcoin. So if you're getting your wages in dollars or pounds, then when the price is crashing, you're going to get more Bitcoin. If the price is going up, you're going to get less, but it's worth more in those terms. So, what I'm really excited about at the moment is this industry is experiencing an incredible recruitment drive. There is so many jobs being created in this industry right now. All I see from all the companies that we're involved with, that we're invested in, is just challenges around recruitment and finding the right people, and appalling customer service because they've only got 200 staff and they need 400. And so we've got this amazing recruitment drive, and a lot of these companies are willing to pay you a percentage of your salary in Bitcoin. And if you receive a percentage of it, in crypto, then you really don't care about prices, because whenever it's crashing, it means you get more crypto. Whenever it's going up, it means your crypto is worth more. So you get a wealth effect both ways. So my tip is enter the economy, participate in the economy. And if your job isn't willing to pay you in crypto, then maybe find a job that will.
Wow. We're getting some great tips here today. And by the way, I love that saying, you're offended by selling it. People get into that mindset. Be offended by selling. Like me, I'm offended when I hear people say, that's going to be one of my new sayings up there. Pound that like button. No, I'm just going to say offended by selling. That's going to be my thing now. All right. Well, speaking about being offended, over on Twitter and in social media, there have been a lot of people that seem like they're offended by a certain event that took place, a certain cryptocurrency event that took place in New York this week. And it's a cryptocurrency event. It was a consensus. I mean, it's not trying to be a Bitcoin event. And most people that are into cryptocurrency now are into ICOs and stuff. So, Giacomo, let me start with you. What do you think about events, cryptocurrency events? Are they blown out of proportion? Should people just be like, yeah, that's a corporate event. Let them do what they're going to do. That's them. I'm Bitcoin.
I don't know. I still feel some mixed feelings. I mean, I'm not easily offended, but when I was at Consensus last time, I was kind of annoyed. There is a lot of people that owe his position, their position to Bitcoin, to the Bitcoin revolution, even the hype that the ICOs and the blockchain companies are parasiting right now. This hype exists. It's mostly irrational. It's mostly unjustified, but it exists only because of Bitcoin. So while I think that it's kind of inevitable that some kind of parasite business activity can focus on scams, altcoins, ICO, private blockchains, at least they should probably try to be respectful of the real stuff, as it's on your t-shirt, right? Bitcoin is the real stuff. It's the real thing. So there is the real thing. Exactly. Buy and hold. There is a real thing. It generated a lot of interest. On top of this interest, a lot of noise was created. And on top of this noise, there is an industry of nothing, which is just based on empty marketing. So at least they should probably try to keep some kind of attention toward the original real thing. And I don't think that, so. The last two time, the last year and the year before, I was at Consensus, and I've just seen a scam show. Basically, everything was about stupid tokens without any meaning, or a private blockchain without any meanings. And the few panels about Bitcoin were actually run by discussed or controversial or compromised Bitcoin figures. Don't forget that last year Consensus was used in order to organize an actual attack against Bitcoin. So this year I didn't mean to go to Consensus anyway, but I did mean to go to New York City because what is beautiful about Consensus is that it is a Schelling point of interesting people. So everybody is in New York in that week. So the smartest move of all is to go to New York on that week, do not participate in Consensus, and just meet in the side events and go out at dinner with very, very cool people, because it will not be easy to replicate that kind of Schelling point with other conferences. So Consensus has a special place in the ecosystem because it was one of the first, the best funded. It happens in New York, which is the center of the world. So it's not easy to replace that. But itself, the conference is. I mean, they told me that this year it was a little better. There was Jimmy Song saying something rational during the conference. That there have been. I've seen Andrew Postra with the Scancoin Bot T-shirt. So funny things happen. But I know there is some kind of ingratitude. It's like some of this conference feels to me like a little bit of not very grateful to what created all that stuff.
Well, I do like your idea of having like alternative gatherings in New York during the week. And I know some people did that. Some people just went and hung out in New York because they knew other people were going to be around. Hey, it saves them some money. They don't pay to attend it, and then they just get to hang out with the people afterwards. Simon, what are your thoughts on cryptocurrency, like these cryptocurrency events, not Bitcoin events, but cryptocurrency events?
Well, I guess what is something that we all go through. I have to deal with, and I have to remind myself about quite often that the adoption comes with like all sorts of side effects, which are a bit strange for you to feel. Again, let's return to psychology. Seems to be the theme of this one. I don't talk about psychology that much, but hey, it seems to be going there with this one. You bring it out of me, Adam. But in thinking of psychology, you're involved in a niche community. Not many people believed in it. It was a very small thing. It was very few people. I remember the days when we were all aligned with a common belief about what this meant to disrupt banking. And Bitcoin was the thing that was going to disrupt banking. It was a crazy vision. It was something that very few people could buy into. But anyone that did, we were kind of aligned around this common vision. But then the industry got adoption, the industry gets growth, and you start to find all these different types of people that in your mind, you start to think, do they really deserve to be here? Were they around in the beginning? And you start to actually go anti-adoption, where you do the opposite of adoption, where you start getting concerned about other people being involved and newbies and all this stuff. And really, this is called adoption. This is what we wanted. Back in those days, we just wanted nothing more than more and more people to be involved. And so you do start to feel this crazy love-hate relationship with newbies and new adoption and new growth, where you kind of fell in love with what it used to be. But then it can never stay that way because you want the whole world to use it. And if you want the whole world to use it, then you're going to have all of these things and all of these different beliefs and all of these different people that are going to come to this for many, many different reasons. And so, I think we've all got to come to terms with that actually all of this has favored Bitcoin in the end. All of this has favored, if you look at the growth of Bitcoin as a result of the growth of the cryptocurrency and blockchain sector, it's been nothing but positive. When no VC would invest in a Bitcoin company and suddenly VC started investing, they also started telling banks, and all banks started telling the world that, oh, there's not this thing called Bitcoin, there's this thing called blockchain. And then everyone would go out and talk about blockchain, and every Fortune 500 company and every FTSE 100 company and every government and every central bank in the world was into blockchain. But there was only really one blockchain that was working, and that was Bitcoin. So it drove a lot of adoption to Bitcoin because it all drives back to Bitcoin in the end, because everyone tries to understand Bitcoin in order to try and understand blockchain, in order to try and understand ICOs and all these different things. Then, Ethereum comes along, and that leads to disruption in capital markets and ICOs and new funding mechanisms. But we never saw more growth in our industry at the same time. And that's all because everything had a way of getting funding. It was touching more people. It was bringing more people in. And a lot of those were getting back to Bitcoin. A lot of this stuff is traded against Bitcoin. And it will continue to go through that cycle. Now we've got all the investment banks coming along, the trading desks, the fund managers, the custodial relationships, all the institutional money that's going to be coming in over the next few years. And all of that, while they won't be holding it in a hardware wallet or trying to disrupt banking, but eventually a lot of these people will find the user cases, and everything does point back towards, because the user case of being able to own your own money, spend your own money, and have a monetary policy based upon savings rather than debt is something that everybody is going to need at some point. And so while you might invest in an ICO that goes wrong, you might invest in a Ponzi scheme, you might invest in something that is built upon Ethereum, you will find your way back to Bitcoin, you will find your way back to the cryptocurrency sector. And eventually you're either going to leave the market, or you're going to get all your money stolen with someone else looking after it. And eventually you're going to find a hardware wallet, and you're going to learn the true value of owning your own money, spending your own money, and being able to have financial independence and freedom. So a long way of saying I've come to terms with embrace it all. It is all leading to growth in our industry. It might seem, originally I do remember when Ethereum was at some point seen as an attack against Bitcoin, and it was going to take a lot of the mining power. But it turned out it wasn't. That two blockchains came along, and they had different user cases, completely different things, and they drove lots of people to the market. So I'm kind of getting round to the fact that just embrace it all. It helps my mind to believe that everything does come back around, and this is growth, and it's all a good thing. So when conferences like Consensus, I remember after the Mt. Gox hack, I think it was 2013, 2014, there was a time, back to the original conference I was talking about with Tony Vase, Inside Bitcoin went bust because they could not attract more than 200 people to their conference. And there was a time when you couldn't sell any tickets, nothing could happen. But now we've got like, what, 8,000 to 10,000 people turning up in New York. That's an incredible thing. That's just such a great thing for our industry, despite the fact that they might be going there, learning about different things, coming at the strange level. But let's hope that their education does lead back to the core principles of what this can. And I do believe it will, because at some point, everyone is going to need the original user case. And that user case will come, will be important to so many people, and its utility does increase the more people get involved, and they come in at different levels.
Wow. Hey, everyone. He talked about storage there. Remember, links below if you want to get Trezor, Ledger Nano. Also, links to these guys are listed below, and links to the archives. You can watch last week's This Week in Bitcoin. That was a pretty wild time. Whoa, now. But yeah, check out the links below as usual. Okay. I don't know if I'm going to go to Simon or Giacomo right now. Giacomo, you had a story. What was that with the China and the altcoins that you were talking about with me? I hadn't heard that story yet, because I've been kind of out of the loop the last 24 hours.
That's great. So I will copy paste the tweet on the chat, so you can share it if you want on the public chat. It was May 16, so it's 2 days old actually, but we are starting getting fun with it just now. So basically, the China Ministry of Innovation and of the Ministry of Industry and Information Technology released the research with the ratings of cryptocurrencies, and it was so fun for everybody, because this rating do not have any kind of possibles. They are pure entropy, like pure randomness, something which is very difficult to recreate in computer science. They created pure randomness. So like if you look at this table, the first cryptocurrency, so Bitcoin, like the first cryptocurrency, the more capitalized, the only one with the best engineers in the world, the only one which is decentralized and not depending on a single company or a single leader, the only one which has financial instruments on top of it, like future markets, the only one with a giant infrastructure with satellites beaming blocks down by the space, Bitcoin, that's number 13. And before it, there are BitShare, Quantum, Stratis, Monero, IOTA, Cardano, Stellar, Komodo, Neo, Lisk, Steam, and Ethereum, which is like the #1 cryptocurrency. And so if you see, there are also sub-index which are very, very funny. Like the #1 for technology is actually Steam. So a Ponzi scheme used to create a clone of Medium, which attached with an attached Ponzi scheme, is basically 82.6 of technology score against Bitcoin, which is just 39.4. So it's like Neo is actually a clone of the Bitcoin repository. It was supposed to be the Chinese Ethereum, but it's not a clone of Ethereum. It's a clone of Bitcoin with few modifications which do not even work. And it is 69.2 of technology. And better of all, like Bitcoin, the only cryptocurrency which is used by people to buy stuff in the real world. I use Bitcoin to pay for my VPN. I use Bitcoin to pay for hotels and flights. Often I get all my wage in Bitcoin. People is using Bitcoin to counteract inflation as a score of application of 13.1, while, for example, NEO, the NEO cryptocurrencies, has an application point of 26.6. So it's very, very funny. You have to check it out.
I'm looking at it right now, and I don't even know why the Chinese government did this. I mean, this just shows you how efficient governments are. I don't even get their point of even. I don't know. Maybe they want to seem relevant. I don't get this at all. Again, you can't put them on pedestals, people. That's the reminder. Remember, you mentioned actually NEO, and this is a great case in point. Everyone says NEO is so great because the Chinese government's interested in it. You think a government that comes up with a list like this in terms of cryptocurrency, it's a good thing that they care about NEO? I mean, that would make me run for the hills if I heard that the Chinese government was in.
But even look, even if there was an explanation that was like Chinese government is trying to pump Chinese thing, I would be fine with it. Like Chinese government will put NEO first or Bcash second and Bitcoin third, but they are not even doing that. This is just complete randomness. But that's one of the reasons I do not completely agree with Simon about what he said just a few minutes ago, because this kind of noise, I mean, it is somehow also a zero-sum game. There are scarce resources of attention, of mind share, of also developers, and even if eventually they will come back to the real thing in the end because of natural selection, in the short term, this kind of nonsensical noise can create a lot of diversion of scarce resources. Like think about institutional money diverted to this kind of stuff because they're following the official Chinese government rating, which doesn't make any sense. And also, when people will realize that all this noise is based on nothing, it will not come down as they will not be able to differentiate Bitcoin from the rest. So yeah, it was everything was a scam. Now let's get back to Bitcoin, because for some amount, for a period of time, Bitcoin will be buried under the crash of the nonsense bubble, just as it happened with internet after the .com bubble burst. The internet development itself was hurt by the crumbling of the .com pet.com bubble. So I'm not so optimistic about this noise. It's funny. I mean, I have some good laugh when I look at it, but I don't think it will not create damage.
Well, I'll say this: people have to have personal responsibility here too. They cannot blindly follow what a government says and put certain people on pedestals. I mean, this is the free market here. People have to do their own research. And again, there's a lot of crypto noise out there. There's a tremendous amount of crypto noise out there. That's why people cannot be impulsive. They have to take their time and learn about this stuff. And most people aren't going to take their time. Most people are going to be impulsive, and they're going to get into things like this. And yeah, there are going to be some developer type of people who maybe want a quick buck and just like, hey, this sounds cool. And they're going to devote their resources to things like this when they should be devoting them to other things. But hey, it's their choice. It's their mistake. And well, we'll have to deal with it. They'll have to deal with it the worst. I mean, the people staying on the straight and narrow, using their heads, not being impulsive, long-term thinking, take that route, people. Simon, any thoughts to that and what he just said? But also, when we're talking about countries, you're in the Isle of Man, so you've got something to say about the Isle of Man, and I want you to share that. But any reply to what Giacomo said, and then take it away with the Isle of Man.
Yeah, I mean, it does remind me of, I spent a lot of time in Tokyo and trying to understand the regulations and what they're doing out there. Like, the adoption is fantastic in Japan compared to the rest of the world. Some of the things they're doing out there is, you see billboards with Bitcoin and all sorts of stuff. You see shops with Bitcoin. It's really an amazing place to go and experience. But I remember we were doing a lot of due diligence on the regulations out there, and there's approximately 16 regulated exchanges. They got a really clear, really clear regulatory guidelines, where, prior to CoinCheck, they were the CoinCheck hack. They were taking on, lots of licenses for that. Now they're having a bit of a readjustment as a result of the two largest hacks happening in Japan. But one of the things that really made me chuckle was they had a really clear list of the cryptocurrencies that the regulated crypto exchanges were allowed to list. And there was, I think it was like 20 different cryptocurrencies. So you'd expect the ones that were, kind of their own blockchains, like Bitcoin and Ethereum and IOTA and Cardano and all these types of things. But then there were some really random ones that just made the list. And you're like, how does this get there? Pepe Cash was an authorized cryptocurrency for a regulated cryptocurrency exchange in Japan to list on their exchange. That's, where does this stuff come from? And it's just really, really funny. And I was, reading through the list, and then there was a couple that I've just never heard of that, I think, my job is full time to know what's going on in the crypto market. And there were still currencies on that list of the top 20 that was supposedly regulated exchange could have that I'd never even heard of. It was the first time I heard of it. So, it is pretty funny of what happens when governments get involved in this market. But hey, this is genuinely a free market. That means that banks can be involved, governments can be involved, central banks can be involved, everyone can do what they want. And that is kind of a side effect to that. And I guess it's just up to people giving good education, and people learning through the experience of hard knocks, and hopefully they don't get knocked so hard that they never return. But this is a genuine free market experiment where there's competition in all financial markets like we've never seen before. And that does involve lots of bad players, lots of good players, lots of people doing things for reasons that you don't like, and everyone being able to be a participant. So it's just fascinating. Speaking of Isle of Man, Isle of Man's a little bit of become a little bit of an experiment for what I think is just a really interesting user case. So the Isle of Man is 85,000 people, and they have a great dependency upon the Bank of England. When they were the first government in the world to actually try and support the crypto industry, they get Bitcoin. When you speak to politicians out here, they don't talk about Bitcoin in the way that every other politician I've ever spoken to talks about. They talk about, well, why can't it be used in the way it was actually designed to be used, where it's decentralized and people own their own money. And they don't talk about how to do it in relation with the banks. And so what I'm really excited about with the Isle of Man is that it's got this interesting user case where the Isle of Man has a version of the pound called the Manx pound. They can print their own notes and coins, and there's a lot of farmers out here. So you still need paper money because they like their paper money. But in terms of the digital money, anytime the Isle of Man tries to implement their own policy in order to support the crypto industry, they get a call from the Bank of England saying, hey, we can remove all clearing to your island, and remove the ability for your banks to support. So even banks out here wanted to support the crypto industry and wanted to serve some of these businesses, would get the Bank of England calling them saying, hey, this isn't in line with our goals. We're going to pull your clearing to your banking system. But what I find, we're now in this day and age where people are, people really slag off things like stable coins and things like that. But I think it's great that now somebody else can issue the pound. Somebody else can issue the dollar. The Fed issues the dollar, but so does Bitfinex. They issued US dollar tether. And now so do Circle. They are issuing their own version of the dollar. And so could the Japanese government. And so could the Isle of Man government if they wanted. So now we do not have a monopoly on the dollar. So the Federal Reserve can do what they want with the dollar, but everyone else can create their own version, and it's pegged to the political, monetary policy and fiscal policy of whatever the US does with their cryptocurrency. So I'm really excited by the thought of what governments can do when they back when they create cryptos backed pegged by somebody else's currency. And then maybe the Isle of Man could completely remove their dependency. They could become an independent island. They could create, the only reason that they got strong-armed from, I spoke at the Isle of Man Crypto Valley Conference in 2014 when they were trying to support this industry, and all the exchanges came over, and and they really were trying to push this, but the Bank of England halted everything. And so what if there isn't a monopoly on the printing of money where they can print their own coins and cash, and then there's not a monopoly on digital money because they can create their own pound pegged to and then they can integrate that with their own financial system, and then they can get independence here. And I think that that's just a really interesting thing. And then what if you can create your own, every single asset class in the world, gold, oil, real estate, everything is being actually traded through these tokens, and they're traded against Bitcoin, they're traded against Ethereum, then they're no longer priced in dollar. They're no longer dependent upon the dollar to derive value, which means that you then have competition in all of the assets of the world. You have competition against the dollar, you have competition in Silicon Valley, you have competition against Wall Street, and therefore David can finally, I believe, have a really good shot at trying to beat Goliath, because there's competition in all these markets. And this is why I believe there is a bigger market than just thinking of Bitcoin. Bitcoin is so important to me. It's a global savings account. It gives you, it does all the things that no other cryptocurrency can do. But by taking all this token economy and everything that came out of Ethereum, and everyone, all the capital markets and all the world taking all these assets and all the financial institutions, tokenizing them, trading them against Bitcoin, trading them against Ethereum, means that every single participant, every single country can do that and finally get a level of independence, because the currency that trades between all these things is no longer attached to any country that has any political agenda. And that is what Bitcoin can do. Bitcoin can be something that everything is traded against, that has no political agenda. And so I see this personally as David being able to beat Goliath. And that's why I'm really excited about the opportunities in a country like Isle of Man to be able to experiment a little bit more. And all of these smaller countries will, because the country that has the most to lose from crypto adoption, while they might capture the regulated market, and the regulated market in crypto will still be huge, Japan's showing that you can capture the regulated market, but the decentralized market, Bitcoin, the way it was designed to be, none of that's going to go away. That's all still going to exist. And these smaller countries can attack the dollar, can attack Wall Street, can attack Silicon Valley.
The country with the most to lose is, you didn't say the country.
United States of America.
That's
they've got the dollar, they've got Wall Street, they've got Silicon Valley, and every asset. You've got to look at, where did America get its power? Well, it negotiated agreement to make the US dollar the most important thing on the fall of the British Empire at the end of the World Wars. And those Bretton Woods schemes, those negotiations, made the US dollar the most important currency in the world when it left the gold standard, because gold was originally attempting to do what Bitcoin did. It was a system whereby everything was traded against gold so that you could keep the central banks honest. But now Bitcoin's actually doing that in a decentralized way. And so, I do believe that the country that has the most to lose out of crypto adoption is the United States. But I also think it will make the United States a better country, because they'll have to rein in on their debt. They'll actually have to not print unlimited money, because there is competition on the dollar. And they will have to compete against these, without an unfair advantage, because the dollar happens to be the most stable, useful currency in the world. And that's an exciting thing. And I think that's good for America and American people in the end, because it keeps politicians honest, it keeps governments honest, it keeps central banks honest, it keeps capital markets honest. And that is good for America and the rest of the world.
Independence can bring hard love to the United States. Oh, I like that. Okay. I see where you're going with that. All right. Well, we're getting toward the end of the show here. Giacomo, do you have any follow-up statements, anything you want to add, any stories you want to tell the world? The floor is yours. You've been awesome today.
Thank you. No, not really. As I told you at the beginning of of the podcast, my main focus in this week is changing diapers. So I don't have many other commitments. I will. I mean, I hope to see a lot of people in Building on Bitcoin conference in July in Lisbon. It will be cool, and it will be a great year for not scammy conferences. Actually, there will be the second edition of Baltic on Badger. I will be also at Paralinipolis Hacker conference in October. So it will be very, very nice 6 months in the future. So I hope to see people there starting from July. I will take back my traveling lifestyle. Hopefully, we will see. And thank you for having me here. And thank you, Simon. Great, really great insights.
Hey, I love Lisbon. When is that conference in Lisbon? July what?
It should be July the 2nd, July the 3rd, July the 4th, probably 3rd or 4th. There is also an hackathon before that, starting like 29th. Anyway, the name is Building on Bitcoin. Bob is the same people that were doing Breaking Bitcoin, but Breaking was in Paris. That was awesome. But Breaking was more like security-oriented, adversarial thinking, trade models, security problems. While in this case, Building on Bitcoin is a little bit more constructive, like second layer, Lightning, Bitcoin-based assets, and stuff like that.
Awesome, awesome. All right, Simon, you've got the floor. You can add anything, conclusionary thoughts. Take it away.
Okay, remember there's only going to be 21 million Bitcoins. The cheaper it gets, the more opportunity you get to accumulate. The cheaper it gets, the more opportunity you get to actually save rather than spend, because you might have been tempted to sell and spend. So, you know, just thank your lucky stars if it gets down to 2,000, because then you'll be able to accumulate a lot more Bitcoin. There's only 21 million of them, and a lot of people will get scared of that. Go back to Adam and listen to the strong hands and see if you can do that. So, you know, everyone was waiting for that opportunity. I think everyone always talks about, you know, if only I was around in Bitcoin when it was 20,000. They said, if only I was around Bitcoin when it was $8,000. You know, well, now you are.
Exactly. And remember, people, remember something that Simon said, offended by selling, people, offended by selling. All right. Well, that's it. This was an awesome freaking show, man. And there were only 2 guests. You only need 2 guys of this caliber here, baby. Well, I want to thank everyone that's watching. Close one again. Thank you very much for that $50 super chat. Yes, I mentioned Decred for you. I know you're a Decred fan. Hey, everybody, remember to pound that like button. Subscribe to this channel. Spread the word. We'll be back tomorrow for the Beyond Bitcoin show. I post a new show here every day. This Week in Bitcoin is every Friday. The time varies. We got international guests like this. We got U.S. guests, North America. We got it all going on, everybody. So thanks a lot. Have a great weekend, everybody. I'll see you later. Thank you, guests. Bye-bye.